Here's what nobody wants to admit. Even when Bitcoin reaches dizzying new heights, the financial establishment still holds all the cards, and they just proved it again. The cryptocurrency market just experienced a brutal reality check as Bitcoin plummeted to $115,000 this week, retreating from its spectacular new all-time high that had everyone talking. But here's where it gets controversial. This wasn't just another typical market correction. This was a calculated dismantling triggered by traditional economic forces that crypto enthusiasts hoped they'd escaped. Let's break down exactly what happened, because the details reveal something much bigger than just price movements. Bitcoin had been riding high after achieving its fourth record peak this year at an astounding $124,496 just last week. For those new to crypto, imagine watching your favorite sports team not just win, but break 4 different records in a single season. That's the kind of momentum Bitcoin had built up. The digital currency briefly touched as low as $114,706 before stabilizing around $116,394.87, representing a 1.1% decline that sent shockwaves through the entire ecosystem. Ethereum, Bitcoin's closest rival, often called the silver to Bitcoin's gold, faced an even steeper fall, dropping 2.5% to $4,354. What makes this particularly stinging is that Ethereum had come tantalizingly close to breaking its own record of roughly $4,800 just days earlier. For beginners, think of it like a runner stumbling just meters from the finish line after leading the entire race. And this is the part most people miss. The trigger wasn't anything inherently wrong with cryptocurrency itself. The catalyst came from an unexpected source. July's wholesale inflation data came in higher than economists had predicted. This seemingly dry economic statistic sent tremors through financial markets, because it raised serious doubts about whether the Federal Reserve would cut. It's like having your house foreclosed on, but happening in minutes instead of months. The breakdown was particularly brutal. $124 million in Bitcoin positions were liquidated, while Ethereum bore the brunt with $184 million in forced sales. This creates a vicious cycle where selling drives prices down, which triggers more liquidations, which drives prices down further. But here's where the political drama enters the picture, and it's causing heated debates in crypto circles. Treasury Secretary Scott Bessent dropped what many are calling a bombshell clarification on Thursday, essentially deflating expectations around President Trump's strategic Bitcoin reserve initiative. Instead of the government actively purchasing Bitcoin with taxpayer money, as many had hoped, Bessent clarified that the reserve would primarily consist of Bitcoin already seized by federal agencies from criminal activities. The government would only explore budget-neutral pathways to acquire additional Bitcoin, bureaucratic speak for don't hold your breath. This revelation hit the crypto community like a cold shower, with many arguing this represents a betrayal of campaign promises, while others defend it as fiscally responsible governance. The broader cryptocurrency market felt the tremors across the board. The CoinDesk 20 Index, which tracks the performance of major cryptocurrencies like a stock market index, dropped 1.2%. Even crypto-related stocks couldn't escape the sell-off initially, though some showed resilience by midday trading. Bitmine immersion shares fell 5.4%, while Bullish, the crypto exchange that had just celebrated its public debut last week with much fanfare, tumbled 8.9%. However, established players like Coinbase and Galaxy Digital managed to buck the trend, posting gains of 1.0% and 2.2% respectively, perhaps showing that mature crypto businesses can weather these storms better than newcomers. Now here's what everyone is watching: the Federal Reserve's annual economic symposium in Jackson Hole, Wyoming. This event, happening this week, is where Fed officials often drop hints about future policy direction. Crypto traders are hanging on every word, desperately seeking clues about whether rate cuts are still on the table for this year's remaining policy meetings. Thursday's jobless claims data will provide another crucial piece of the puzzle. What makes this situation particularly fascinating and controversial is how it caught so many traders off guard. Last week's test of new highs for both Bitcoin and Ethereum surprised many seasoned traders who had predicted August would bring the typical late summer pullback that historically affects many markets. The expectation was that macroeconomic concerns would overshadow the recent positive momentum around institutional adoption of cryptocurrency, the kind of corporate and institutional buying that many believed would provide a stable floor for prices. Many analysts are now spinning this narrative that current pullbacks represent healthy and strategic cooldowns rather than crisis-driven panic selling. They point to strong support from exchange-traded funds, ETFs, that track Bitcoin and Ethereum prices, as well as corporations that continue aggressively accumulating these digital assets. Here's the data that supports this optimistic view. While Bitcoin and Ethereum ETFs posted net outflows on Friday, they still recorded impressive net inflows of $547 million and $2.9 billion respectively for the entire week. For Ethereum funds, this represented not just a record week of inflows, but also their 14th consecutive week of positive money flow, a streak that suggests institutional confidence remains strong despite short-term volatility. So here's the million-dollar question that's dividing the crypto community. Is this just another routine August correction in a historically weak trading month, or are we witnessing the beginning of something more significant? The bulls argue that institutional adoption has fundamentally changed the game, providing unprecedented support levels that didn't exist in previous cycles. The bears counter that traditional economic forces still reign supreme, and that crypto's promised independence from legacy financial systems remains largely illusory. What do you think? Are we seeing crypto finally mature into a legitimate asset class that can weather traditional economic storms? Or does this sell-off prove that Bitcoin and Ethereum are still just expensive gambling chips subject to the whims of Federal Reserve policy? The next few weeks will likely provide definitive answers, and the implications could reshape the entire cryptocurrency landscape. Drop your thoughts in the comments below. Are you buying this dip, or does this confirm your skepticism about crypto's long-term viability? Let's debate it.